Good morning and good afternoon. Welcome to today's webinar, The Evolving Role of Loan Officers and Processors in an Automated World. My name is Nguyen and I will be your moderator for today's session. Feel free to submit questions in the question box on the webinar dashboard, as audience Q&A will be available towards the end of the presentation. As a heads up, there's a datasheet available in your webinar dashboard to download. Please make sure you get your copy before the end of the webinar. You can also obtain a copy from your MeridianLink account manager. All attendees will also be sent a link to be able to listen to this webinar again. We will have a couple of poll questions before Q&A starts, so we appreciate everyone's participation. One lucky attendee will win a $100 Amazon gift card, so please stick around to the end of today's webinar. We will announce the winner after Q&A. Our deep dive masters today are Stephen Huang, our key account director here at MeridianLink, and Tim Nguyen, co-founder and CEO at BeSmartee. And with that, here's Stephen.
Thank you, Nate. I appreciate the introduction. You're very, very kind to call me a mastermind, which is probably more like the cartoon where I have to be the Will Ferrell character and can't say Metro City and have to call it Metrocity. So we'll see how this goes today. Well, I appreciate everybody joining in. And Tim, welcome to the call. Thank you for joining.
Thank you, Stephen. Thanks for having me here.
Absolutely. As Nate said, we are talking about the evolving role of loan officers and processors in an automated world. But before we get started, I must show the obligatory, this is strictly confidential. Please do not discuss this outside with your peers if there's anything that you deem as inappropriate. So please make sure that you abide by this. And with that said, my disclaimer is over. So today's agenda, we're going to be discussing, as I said, the evolution of the life of a loan officer processor, what improvements can be made through mortgage automation, what the expected benefits are for the borrowers and for the lenders. And then obviously, what are the next steps in your journey as on the lender side of things. So let's kind of dive right in. Let's talk about what it was like if you guys, and I'm hoping most of you guys remember what it was like 10 years ago being in the mortgage space. I remember, I was an actual processor back in the 2008 to 2011 timeframe, and my desk looked eerily similar to the guy on the left here with the clock and the time running out. I had paper files in those little wire racks and the two-prong folders. I think everybody kind of recalls those days. It was 2008. I was working for a broker at that point. I had a 300 loan pipeline, closing about 100 loans a month at that point. And there was no such thing really as technology back in 2008 in terms of automation, in terms of kind of what we're trying to talk about today. Everything was going to the scanner, scanning it, labeling my conditions 1, 2, 3, 4 on all the various pages, submitting a full file through the scanner, uploading it to Chase's website back in the day. And I look at kind of where we've transitioned here in the last really 10 to 15 years, and having somebody like a BeSmartee, a MeridianLink LOS, to be able to leverage my life. I was using Calyx back in the day. Back then, it looks the same as it does now, and it worked great on the broker side. But it just the requirement of data, the requirement of validation is just significantly higher, and the access to the data that we have is so much better. It's really nice to be able to do that. And what we want to kind of talk about is how that evolves. Whether that's going through your, prospect and developing relationships with your customers, your vendors, your realtors, which, obviously are critically important, your insurance agents, your title agents, spending the time guiding your clients from, their new purchase transaction. It's the biggest transaction they're going to make, generally speaking. It's nice to be able to spend, face time with your customers, get the information, as part of the guiding of the client, you're educating them, right? Reviewing the rates, going through fee sheets, things like that. And then you're sending them on closing it. And a big part of that, right, is trying to make sure they're having a smooth, seamless connection. And really for you as the lender side to be able to execute on that vision on providing superior customer service, right? So Tim, I'm going to kick this over to you now. And, what are you seeing on the point of sale side in terms of, the efficiencies that are gained by leveraging a strong point of sale and LOS partnership? Are you seeing a transition in workload from the LOS to the point of sale and things like that?
Yeah, absolutely. So at BeSmartee, we process about 90,000 transactions across different channels, whether it's consumer direct, TPO, or traditional retail. We stay close to our clients. I, in particular, stay close to a good handful of our the most original clients at BeSmartee. So a lot of the perspective here I'll offer is from that perspective. The evolution of what we call the modern loan officer and the modern processor in this new day and age is very different. I too remember the days where we had stacks of paper, where it's about understanding the internal processes, understanding how to fill out forms, understanding where to get data and gather data. But now that accessibility is online, it's easy, it's guided, the data is plentiful. That makes it a lot easier for a loan officer to just change and evolve the way they do business. One of the primary things that we see here is they're using the time they save to offer different value in different ways. And what that really means is they're focusing on relationships. They're focusing on their pipeline. They're focusing on understanding consumers, understanding the consumer's needs to provide better advice and better guidance. We see that the loan officers and processors are transitioning away from being, data entry folks and really shifting over to a trusted advisor role, where their word guides their commitment to such a long commitment, financially, to buy a home or to refinance a home.
Yeah, it's interesting because you touched on something about how there's the transition to spending more time with your customers. I remember, and I call it the sweatshop days, right? When we were just doing all sorts of volume back in 2008, when the rates had first touched in the fours, it was purely transactional. Everything was churn, 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 churn. Let's go, let's go, let's go. You could argue a little bit of that happened in 2020 when the rates again took another big dip. But I do think you're right that we're seeing a significantly higher amount of people spending time with their customers and giving them the formal education that they need. And when they come, which allows the lenders and the loan officers to establish that relationship and say, hey, when you need a refinance, guess who they're going to call? The person that spent the time to give them that education, right? And so that time spent, it builds rapport, it builds that really a relationship with that customer where it's not as transactional anymore, where it's, hey, we're sending you recipes with our CRM drip campaigns, or whatever that may be. And I think it matters in terms of how we do business moving forward.
Yeah, and I want to reiterate that statement, Stephen, because you hit it right on the nose, right? It's people expect transactions today to be easy, smooth, transparent, right? It's table stakes now. That's what consumers expect throughout whatever they purchase, including a mortgage. So that relationship is really that extra oomph, you can call it, to really build that relationship, discuss different products that you have at the bank, different opportunities you have as a lending arm, right? And I can't stress that enough. It's the relationship matters. We work with people at the end of the day. We work with people that we like and enjoy and respect and trust at the end of the day. The transaction itself, it has to be easy. It has to be fast. Right. It has to be transparent. That is table stakes.
Absolutely. And full disclosure and transparency for everybody on the call, I was a former client of MeridianLink before I worked here. And I was actually a former client of Tim's with BeSmartee. So, we obviously have a very good relationship in terms of just having been clients for 7 years, for a long time. As part of that, though, what's interesting is you guys are kind of now trying to focus on fine tuning the experience to where you can achieve the minimum required from a trade perspective, from a CFPB's perspective on a 7-day close. Let's talk about that a little bit. So, obviously one of the things that comes on the front end, well before a file's turned in, is the loan officer has to do their jobs. They have to be able to provide their quotes. They have to be able to provide and do rate shopping and scenarios and things like that. Let's talk about some of the tools that, that you are seeing that or building in BeSmartee that kind of helps leverage that relationship and kind of streamlines that whole process for them.
Yeah, absolutely. I'll start with the funnel, the top of the funnel, right? You hit it. Back in those days, right, there was one way. Either you're on the phone or you're in person, collecting information, processing data. Okay, that really hasn't changed. The channels have changed. You could do it at 2 a.m. in the morning online. You could do it at a bank branch. You could do it at a credit union branch. You could do it at an open house. You could do it at a coffee shop. You could do it across a kitchen table, where you build that rapport the best with your consumers. So really the fundamental process hasn't changed, but definitely the world has gotten more complex. So many more channels and opportunities to communicate and build that rapport in different ways. So once you have that data, right? So you start with the data collection of the application, make it 24/7, make it effective anywhere, anyhow. And then we build in tools to make processing of that application much more effective. Whether it's the automation of credit, pretty simple to do, but very necessary. Whether it's a complete 1003, very simple to do, but also very necessary. Then that's where we really start differentiating, is bringing back product and pricing eligibility, bringing back loan estimate fees, bringing back lights out or automated underwriting, completely lights out to the loan officer and the consumer anytime they want. Jumping to lights out this initial disclosures to the consumers, and even redisclosures in some cases. Add to that things like new, verification assets. Something new that we're working on, verification of income employment, that'll reach about 70% of the marketplace. Between an instantaneous and a credential solution, right? You're bringing these worlds of data and processing power and intelligence behind it. You allow loan officers to really go through the process, let the computer do the work, so to speak, and focus your time on things that are more important, the relationship, the trusted advisor role that consumers need in this day and age. And if you look at the demographics too, whether it's millennials or the Gen Zs, right? It's a huge population of potential buyers. And if you look at Gen Zs in particular, they're inheriting a whole ton of wealth, right? They're gonna have a lot of buying power. They're used to that instantaneous, right? Will you be out of business today if you don't have something like BeSmartee? No, you're gonna do just fine, as we saw, but we don't need to rely on a big boom to do well, right? The market's shifting next year. This is the time to retool, to think about how you approach and contact and build that relationship and engage and re-engage with consumers in the first transaction and the last. One of the hidden things I will say about a POS integration into MeridianLink Mortgage in particular is the flexibility to support a growing culture shift from work from home. Okay, people are not tied to their desk anymore. They need access on a phone, on a tablet, on the computer. It needs to talk to the loan origination system, right? They need flexibility. And as executives and decision makers at our credit union and bank and non-bank clients, right? How do you attract the best talent? Well, it all starts with culture, right? That's a big, big shift today. That matters to people. It definitely matters to the future originators that are younger than both of us on this call. It's a new world, right? They want flexibility. Their demands are different. This is one way you provide them the ability to support the life that they desire and support the customers at your bank and the members at your credit union.
Yeah, and that's super interesting, right? Because COVID kind of, obviously we're kind of over COVID out in terms of talking about it, but we can all recognize that there was a massive shift because we now had to realize, well, we couldn't be near each other. We had to work remotely. We had to work digitally. And so it did accelerate a lot of people's timeframes in terms of moving that culture into a work from home culture, which, for me personally, I've always hated going into an office. And so when that happened, for me, it was a godsend for me because I feel I'm very productive at home. But, obviously some people still like that in my office environment. There's nothing wrong with that. But I do think there is a nice balance now where you can kind of do both. You don't have to be in an office. You can still be productive working from home. Funny enough, you mentioned the working from home thing, though, is I remember back in the day in the sweatshop, we still had a thing called logmein.com. I don't know if you remember those days, but I could at least remote access into my desktop and I could still get some work done from home. It's certainly not what it is today, but it did certainly allow me to do that, which, from a culture perspective was fantastic for me because, you're working at 2 a.m. You don't want to be in an office. I want to be able to do that from home. So valid points, all good things. And, I do want to talk about kind of the Gen Z folks. I obviously I'm 37. A lot of my friends have already purchased homes, but there's that younger segment that are in their 20s that are still starting to look at homes, buy homes, and things like that. It is pretty astounding to me how many of them still want to pick up the phone and talk to somebody about the process, right? And so, so much of automation that we've talked about is how do we take people out of, for better or for worse, how do we decrease our headcount? How do we reduce the number of people we have to have? But Mortgage, I had an interesting conversation with a colleague at US Mortgage, and one of the things we kind of talked about was mortgage, I think, will always be a full contact sport. You're always going to have that interaction with people because you're going to need to be able to answer questions. You're going to have people who don't know what they're doing, who are going to lean on their loan officer to be the true pro that we need them to be, to explain how the rules work, all the regulations. Are they getting a good deal? Just so many people, as much information as we have at our fingertips now, there's a lot of people who just don't know how to begin or where to leverage that information. So it is super important to have those people in place to do that. And so, Tim, you kind of already talked about the bidirectional here. Is there anything unique you want to point out as part of the integration that we have with each other? Obviously, knowing that we kind of talked about you want to go to that 7-day close as reasonably as possible. But is there anything unique you'd like to point out?
Yeah, there definitely is. I mean, first off, I would say the relationship with MeridianLink Mortgage is something we value. It's the one LS partner we have where we have regular discussions, strategic discussions, client level discussions. We're talking about what's coming next, right? What the future looks like, and we get the support we need from MeridianLink. How is the POS customers reacting? What are they looking for? And in turn, we learn about what the LS customers are looking for. And we work together, we collaborate. I think that level of relationship is the first thing that really comes to mind. Really good testament of the cultures at both organizations. Now, as we get into more of the integration points, because of that relationship, there are things that we do today together that we've been doing for years that other LSs are just barely opening up. For example, the ability to take lights out disclosures in the POS generated directly with a doc provider, and recording that disclosure tracking log and data inside the OS. That was a integration originally built for BeSmartee. Thank you for that. It helped our mutual clients out and it added a lot of value. Right? That's just one example. But beyond that, there's deep integration in terms of LOS data going back and forth, where there's loan level data, whether there's metadata on the loan, like loan status and other custom fields and parameters that need to go back and forth, the documents, the conditions, the branching, the PML component of it all, the lead source of it all, if you're targeting different channels and strategies out there in the market. What I find here is just two solid organizations that enjoy working together, that aren't afraid to roll up their sleeves and get stuff done and listen to the customers. And to that end, I think it's one of the best integrations that we have, and it's one that our mutual customers find a lot of value in.
Yeah, again, a former client, that's honestly one of the reasons we moved forward with you guys back then when I worked at the bank I was at. We saw the capacity and the possibilities of what a tight integration could be. And, it certainly paid spades for us. Obviously, everybody's experience is a little bit different, so I don't want to, make any overarching guarantees that it's going to be perfect or anything like that. It all requires work. Things you cannot automate, things that require people. To do those things. But
Yeah, I'm glad you mentioned that, Stephen, because you remind me of a point I want to make earlier is, we're not, the 7-day mortgage close is not about taking people out of the equation and eliminating jobs per se. It's about shifting focus, right? It's about making the job easier so you can focus on the things that you're missing today. You're moving data and writing things down and going through manual processes that takes away from the core, right? And I have an interesting fact, right? Is some of BeSmartee's most automated customers are not the most profitable and successful customers, right? And this is coming from a technology vendor, and we're selling automation, right? It's about the balance of it, right? There's people, there's process, there's technology. It all have to work together. Our most successful customers find the right areas to automate. And then they carve out that room to use the manual processes where it makes sense best, right?
Yep.
People still, you made an interesting comment earlier, people want, the Gen Zs, the 20-year-olds, they still want to talk to someone. Could you blame them? It's a huge transaction, it's a big commitment. But what you want to do though is make it easy for them to engage your brand, make it easy for them to present information, lay out the cards on the table, so to speak. And then that relationship takes over. Okay, I get it. I see what you're trying to do. I see where you're at in life. Where do you think you'll be tomorrow? Let's have that conversation. It will guide you to that right step.
And that really resonates, that last piece of, so much of today's generation, and myself included in that, is everything has a social media brand, right? And as part of the company, your brand extension is your loan officer. It's your sales team, right? They kind of represent what the company is going to be about, what the culture is going to be about, and the technology stack that goes with it, right? That's a part of your brand. So being able to provide that experience for your borrowers, from the loan officer side with the point of sale, how much that interacts with the loan officers. LOS, depending on how much data you need, if it's all working seamlessly, the customers never see it. And that's, and ideally that's what they're going to experience, right? They're not going to have to feel any of the things that happen on the back end, right? We want to make that as seamless as possible. So, that's a super interesting fact also, that your most automated customers aren't necessarily your most profitable, right? That's not something you would typically hear. Do you have any conjectures of why that might be? Is it because they've chosen to? I know you kind of mentioned that they want to focus on other areas, but why do you think that is?
Yeah, I'll tell you exactly why it is because right now it's a traditional mortgage lender, bank, credit union, right, doing things the way you do it. You're competing against companies with unfair advantage. But what I mean by that is our most automated customers, or the ones that are trying to be the next big fintech lender, right? They are VC backed, private equity backed, they have tons of money in the balance sheet, and they are not afraid to burn a ton of money every single month. That's your competitor, right? Those are who your competition or your consumers are going to, right? So they're focused and they don't care how much money they close or how much money they lose. They just need to close more loans more effectively and show these metrics to the ultimate, investors and Wall Street, right? So those customers utilizing the maximum automation are fighting at an unfair advantage. So the way you combat that is our other more successful lenders from a profitability standpoint originate more loans. They're automating where it makes sense. They're using extra time to be a trusted advisor. Think about when the internet model first came out when you bought a new car. There was actually an internet division. And people, the early adopters didn't want to talk to a salesperson. They want to go online, press it out, model it out. You go right to the internet division, top financing, right? See the car, give it a test spin. And now the internet division's kind of gone away. It's been embedded into the culture of the dealership. The same thing in mortgages, right? The skill set of that loan officer is going to have to evolve. The skill set of the processor is going to have to evolve. The channels are more complex. It can come from so many different, a branch, a ATM terminal, it can come from so many different areas. The skill sets also require you to be more analytical, looking at funnel and conversion and data and interaction on a more of an analytical level than it is using your innate abilities as a salesperson, as a human being, to read the situation and shake hands and kiss babies, right? So the mental shift we've seen has changed as well. We've seen one client in particular go so far as teaching loan officers internet marketing and internet sales and SEOs and funnel conversions and A/B conversions and how that all works so they can start thinking in a different mindset.
Yeah, that's such an interesting perspective, right? Because those are things that we don't talk about as much when we talk about the automation. Is where does that automation lead to? What are the next steps, right? So that kind of leads into the expected benefits, and I'm going to add a little bit more to this slide here, and that's the expected transitions, and what does the new world look like, right? So obviously, the expected benefits, you're going to get more leads. Hopefully, your pipeline will stay fuller. They're going to be consistent, and ultimately, the goal for everyone involved is this is going to save them time. And what you do with that time, which we'll have a whole conversation about here in just a moment, can mean very different things, right? So, something we kind of glossed over, we talked very heavily on the loan officer side on this, but where does the processor live in all this, right? Because, when I think about my days as a processor, it very much overlaps with what the loan officer does. It's almost the operational extension of what the loan officer is, right? So the loan officer handles the products, the pricing, setting up all the fees. The processor then has to take over that relationship. They have to collect the documents, hopefully through a point of sale. So secure delivery, it's a little bit easier. Bar can do it on their own time, but it's that managing of the relationships, the expectations, the scheduling of closing, right? That kind of transitions now to the processor. But where do they live? Do they live in the point of sale? Do they live in the LOS? That's a conversation that a lot of companies had. We had it at my former company. So it's what does that look like? What are your clients seeing from a processor perspective? Where do they live?
Yeah, it's an interesting question because I think every organization is a little bit different. You have some that are just loan officer, you sell, processors, you process, and there's a very distinct divide, right? A handoff phase. But that is changing. So I got two trends I'll share with you. The first trend that we've noticed is very early on, our most early adopters, they were that model, right? The originators are inside the POS, they receive, the inbound, take applications in the POS, get it ready, move to a processing processor, then would have to clean it up, take it from there and carry it through the process, right? Those original customers have evolved into actually pulling the processors into the point of sale. Our more later customers are already shifting where they're saying from the very get-go, processors are in the point of sale. And I think the reason is quite simple. If the consumer is the center of your universe, if that's what you're in business to do, right? No customer, no business. You want to be as close to them as possible. You want to be where the transactions happen. You want to be where it's most convenient for your customer, your member, okay? The second thing that we're starting to see is actually starting to see more and more clients where the loan officer is being required to do the pre-processing a lot more than they used to. They're sending out the initial disclosures. They're collecting the initial set of documents and packaging it up. Some cases directly to underwriting, some cases directly to a processing team, right? They'll check everything, clean it up, and then ship it over to underwriting. So those are the two trends we're seeing. And I think it's an equation of more and more people are viewing the POS as the center of the universe. This is where consumers are at. It's where we want them to be. It's where things are consistent, it's measured. There's a funnel to it. There's compliance controls to it. You don't have hundreds of loan officers doing who the heck knows what they're doing to originate a loan, right? The process is being followed. It's easier to measure and enhance and optimize. So those are the two big trends we see with processors. They're getting pulled in one case, or they're actually becoming emerging into that loan officer row as well.
Yeah, and that to me makes a lot of sense, right? Because they're an extension of each other. And I think this kind of goes back to what we discussed before for all the executives on the call and people who are kind of evaluating their tech stack. It's all part of that branding, right? If your processor and loan officer, they feel lockstep, they feel in sync from the customer perspective, right? They don't know any different. That means they're on the same page. And now your brand is, these people are fully in control of my process. They understand where I need to be, what I need to expect, and delivering on that. Again, I think technology, no offense to either one of us really, but technology, everybody kind of has some form of technology. It's how do you separate yourself by leveraging that technology, I think is kind of where everybody needs to focus their their insights on, and being able to say, okay, well, we're now able to deliver a closing. Okay, let's call it not quite 7. Let's call it 10 days. You know what I mean? Let's give it a couple rooms of days of buffer there. But in theory, you can now refocus on that customer experience, and then they're going to tell 3 of their friends, hey, I've got somebody for you. They gave me the best experience. And all of a sudden, you've picked up 3 new clients, right? The listing agent on a deal that you closed because the communication was so good. The customer had such a good experience. It moved so swiftly and seamlessly. Now that listing agent's calling you and say, hey, we had such a great experience on the selling side. I'm going to start sending you some of my buyer business, right? My sister as a loan officer, she gets that all the time, where the experience with her, excuse me, the experience with her was so good that now she's picking up additional buyers from the selling side, which, nobody thinks about that, but that's the reality. If you can provide that experience, and especially if you have your tech stack right to do it quickly and effectively, man, it just makes a world of difference.
Yeah, you make a good point. I mean, technology is technology. I'd argue that certain technologies are different. We all solve the same problem in different ways with different approach, different vision, right? And the example I always look at is, remember when Microsoft Office came out? The power to write lots and lots of text and have spell checker and grammar check was accessible to tens of millions of people almost, literally overnight in some cases, right? But doesn't mean that everyone's going to write an award-winning novel. Not everyone's going to give you Shakespeare. It's how you use that tool, right? And the tools are a lot more complex than mortgages. The life cycle of a loan is just so wide. I tell all our new employees, especially the ones who are new to the mortgage spaces, like once you get in, you can't get out, number one. But number two, you have longevity because there's the top of the funnel, the middle of the funnel, the end of the funnel. It's just such a wide industry we're in. And you also hit on something I'd like to talk about is communication. We believe in over communicating at our organization. We hope that other people believe in that as well. And when you communicate to your consumers, you build trust. But most importantly, it should lead to transparency. And that's all people want in the day. They can take bad news. Everyone's a big boy and girl, right? But just give them the information, be transparent, be truthful, get to me as early, set my expectations, right? And if you do that, you're gonna do very well.
Absolutely. If I could brand myself an ethos, that would be it. Setting the proper expectations and things like that. Now, I kind of saved this last bullet point here because I think this speaks to all of us in a different way, but it all is majorly impactful, right? The saving you time. What does that actually mean for everyone? So I'm going to turn this back over to you, Tim. So when you think of saving time, what does that mean to you from just not necessarily your work life, from your personal life?
It's literally you're saving hours a day on the same file. I think the trick here is what do you use that time for, right? So if you don't have to run pricing and go aggregate fees and do the other things required to really present the right picture to the loan officer or to the consumer, if you can take that process and take it down to 20, 30 seconds, right, then it's about using that time in the most wise way possible. I keep on going, I sound like a broken record, but I go back to being a trusted advisor. Mm-hmm. So Mr. and Mrs. Consumer, here are your options. Transparently, there's a lot of them. Well, you can't email someone that. They are going to freeze. They're not going to understand the difference between these products. Why should I get a 10-year versus a 30-year? Should I be thinking about ARMs, right? That's where the relationship comes in, right? That's where the loan officer community, that's where the value comes, being a trusted advisor. I've been there. I've seen your situation. I've helped many people before you. Let me help you. Right. I want to get to know what's most important to you today and also 5, 10, 15 years down the line.
Yeah, I think that's absolutely true. I think about automation a lot, right? Because that's, at least on my side of the house, that's what's every lender is asking me. It's like, how do we automate? How do we automate? Automation means something different to every single person you talk to, one. And then what do you do with that time saved, right? Everybody thinks about it from a business perspective. It's a dollars and cents. What's my ROI on the investment of my automation? What's my headcount reduction? It's all dollars and cents. But something that we don't talk about enough, I think, with automation, and it's super I don't know why, but it's very close to home for me. It's this fear that we're all going to lose our jobs to automation, right? It's real. Everybody thinks about it. We don't necessarily talk about it out loud, but we all think about it. So what does that actually look like? So if and for me personally, if I had more time in my day because things are automated, I don't have to put in as much work. Does that mean I get to miss less events after hours? I think about like people with kids. How many times have you had to have a last minute work call? I have an emergency. I've got to handle it, but it's the same time as your kid's ball game or your kid's play or your music recital, right? And Tim, I'm sure you've probably run into that with your own kids. Have you had canceled events because you had to go do something last minute for work?
Unfortunately, it happens. I hate when it happens, but it does happen.
Sure.
Sorry, Dad's got to finish up a call. I'll be in there as soon as I can, 30 minutes, 40 minutes, an hour later than expected. I want that time, right? So for me personally, I'll use that automation to do two things. Spend it with my family, especially my wife, my kids, maybe squeeze in a hobby or two there.
Yeah.
But I also, from a business side, though, will use automation to be more proactive than reactive, right? If I'm in a seat where it's calmer because things, I don't have to do a lot of busy work, I can think about, okay, what's next? What's next? What's going to go wrong? And guard against those threats, right? Guard against those weaknesses ahead of time, work with the other managers, work with other departments, really understand, okay, can we measure this? Can we get a leading indicator for this? Right, and if you shift away from your reactive to be proactive, then your business will grow, your time will be opened up. You can really use that time to whatever's best for you. Go see a ball game, go exercise, go make more money, whatever you want to do with that time. It's yours.
How do I do both? Can I make more money and exercise at the same time? Is that something that we can do?
A few people have figured it out, but
yeah.
We see them on the news normally.
Yeah, right, exactly. So that kind of, it's, and I know I've slid back and forth between the two slides, and I apologize here, but the last thing I kind of want to touch on with the saving of time is, it's all, and I know this is a beautiful point you bring up, and I keep coming back to it, but it's all about that. It's that company ethos. It becomes your brand. If you can save time, so you can, part of your culture is to send you home to get you to your personal events. You can spend more time with your family. We talk about money a lot because that's what we correlate to business. But, with COVID, everybody's now gotten a taste of work-life balance. And that has to be part of what we think about moving forward. And I think that's where a lot of the automation saving of time during the processing really will play a big factor for all the folks that are on our call today. As you're evaluating your tech stack, thinking about how that's going to impact your company, there are some of the non-tangible or the non-dollar and cents ROIs that you can give back to your employees that I think would certainly make their lives better, not from just the dollars and cents, but also from a work-life balance. And
I belong to a local network of CEOs where we can get to a peer table. We talk about process issues and opportunities, all that, right? And I'll say this to the executives on the call. And something we've recently talked about is, when employees say work from home balance, they're not talking about working less. In fact, in COVID, employees are working more. It's the fact that things aren't 8 to 5, right? It's the fact that they want to take care of work. They just need to make it balanced, right? Let me pick my kids up from school. Let me drop them off from school. I'll wake up an hour early, do that, go do my thing, come back. Now I got complete silence. Let me get to work. Let me, do their homework. I'm coming back after dinner. We're finishing this off, right? So we actually see that at least our employees and some of our customers we surveyed, people are working more at home, right? But they enjoy the flexibility. It gives them the balance they're looking for, right? Employees aren't saying, I want to work less. They want to be productive. They want to be contributors to a greater success. They just need flexibility.
I absolutely agree with that. I was never a good 9-to-5er myself. I would always be late in the mornings because I'm just not a morning person. But, having the flexibility to work later into the night was always my preference because I'm more awake. I'm more, I think clearer, and so 9-to-5 doesn't work for everybody. Having the ability to flex your hours and put in the work when you're busy, and then being able to, pick up your kids and then know that that's a planned break in your day. It's really nice from a mental perspective. You're not stressed. I think it just certainly helps the whole mentality. Kind of the last couple of things. This is kind of a recap of what we talked about, enhancing that bar experience, right? As part of that bar experience is diving deeper into that relationship, creating that long-lasting connection with that individual, that person. It's not a screen, it's not an application, it's that person on the other side, and making sure that they are achieving their goals and their dreams of buying that house or upgrading that house or doing their renovation. And lastly, and this is a big key component for me, and I think a lot of that's because I grew up as a millennial, but I think as we're migrating forward, this is clearly a big talking point, is the work to live versus the live to work mentality. I think everybody is starting to get to the point where you get to an age where you're like, I don't need to work as hard or as much anymore. I want to be able to enjoy my life. We kind of stopped grinding a little bit, just a smidge, not a lot, just a little. And get to enjoy the money that we make and things like that.
As we kind of roll forward here, we wanted to let you guys know that if you have any questions or concerns, you can deep dive into what we have here at MeridianLink.com. MeridianLink Mortgage contact is Stephen Huang. BeSmartee's contact is Tim Nguyen. In upcoming webinars, we have one coming up here in December. So please stay tuned and watch your emails, and please join us then. With that, I'm going to turn it back over to Stephen and Tim to say their goodbyes, and hope you guys have a great afternoon.
To wrap up here, Tim, thank you so much for the time today. Really appreciated the conversation. Really excited about what we're doing and kind of things to come here. You know, and I look forward to our next conversation. And, you know, if there's anything you'd like to add, please feel free to do so.
No, you know, I would just say, Stephen, thank you. Thank you to the MeridianLink organization. Pleasure being on. Hopefully we added a little bit of value. If anybody wants to deep dive in their tech stack, just general questions, doesn't have to be a selling session at all, feel free to shoot me a message. Happy to just give you some of my thoughts.
Yep,
Thanks,
and
Stephen.
here's Tim's contact just in case you need it. It's tim@BeSmartee.com.
Great, everybody. Thank you for your time and attention, and we will see you next time.
Thanks, everyone.
Thanks, guys.